Hello students. Today we are going to discuss about example of profits and gains of business or profession. This some may come in the examination for 9 mark or 10 mark or 12 marks. So this is very important example for exam point of view also. Sivam, a retail trader of Cochin, gives the following trading and profit and loss account for the year ended 31st March 2022. These are the different expenses given to opening stock, to purchase, by sales, and you will get gross profit. This is the amount of gross profit here given. GP to salary, to rent and taxes, interest on loan, depreciation, printing and stationery, postage and telegram. These are the different expenses. Loss on sale of shares, short term, and other general expenses. From these also you have to identify there are whether there are certain expenses which is actually not to be recorded on the debit side of the profit and loss account, like loss on sale of shares, short term. It is a short term capital loss. So this type of expenses, as per the income tax, it is not allowed, so it is considered as an inadmissible expenditure. So what you have to do in this case, you have to add this expenditure, and by that amount you have to increase the profit. Now depreciation is also 1,05,000, but income tax has its own way to calculate the depreciation. Here you have to classify the asset into different block, and according to the class of asset, block of asset, and rate of depreciation, one block is prepared, and on the basis of it we have to calculate depreciation. So this depreciation is not allowed. So this is also considered as inadmissible expenditure. If nothing is, no information is provided, then we don't have to give any effect to this. Now gross profit and income of UTI, this is also inadmissible income, because income from UTI is a income from other source. Any other thing, if you find out here directly by studying the profit and loss account, that you can write down if it is admissible or inadmissible. All other expenses are revenue in nature, like rent and rates, interest on loan, then postage and telegram, then other general expenses. These are revenue in nature. But if some information is provided related to this, then they may be added or deducted. Now, it was found that some stocks were omitted to be included in both the opening and closing stock, the value of which were opening stock rupees 9,000 and closing stock rupees 8,000. So it is a, that is, this stock is not included into the stock. So what treatment we have to give? It is nothing but undervaluation of opening stock, and it is undervaluation of closing stock. Now in this situation, what treatment you have to do or give? 9,000 is undervaluation. So if you write down this 9,000 on the debit side of the profit and loss account, it will decrease your profit. From your net profit, this 9,000 will be deducted, and this is undervaluation of closing stock, and by this amount your net profit will be increased, because net profit is written, closing stock is written on the credit side of the profit and loss account or trading account. So that is why by this amount your profit will increase, and by this amount 9,000 your profit will decrease. So that you have to keep in mind. Once again I am telling you, opening stock will decrease your profit, because it is a expense which you have not recorded on the debit side, and closing stock is what, it will increase your profit because it is recorded on the credit side of the trading account, and by that amount your profit will increase if you write down this closing stock on the credit side. So that is about the opening stock and closing stock. Now salary includes 10,000 paid to his brother, which is unreasonable to the extent of rupees 2,000. That means what? Here section 40A 40A 2 is applicable. Unreasonable and excessive payment made to a relative, and brother is what? A relative. It, brother comes under the definition of relative. So any excess payment made to relative is not allowed. The whole amount of printing and stationery was paid in cash by way of a one time payment to Mr. Ramesh. So now it is a Single transaction, one time payment means what? It is done on a single day to a single person. If now, and it is in cash. Now what we have to see here, if printing and stationery amount is more than 10,000, then fully disallowed, 100% disallowed. But if amount is less than 10,000, then there is no effect for this transaction. So here 40A3 is applicable if amount of expenditure is more than 10,000, then only amount this section 40A3 is applicable. Now let's see the what is the amount of printing and stationery. So here printing and stationery amount is 23,200. So obviously it is more than 10,000. So whole amount of 23,200 will be added into the net profit. Now the depreciation provided in the profit and loss account is 1 lakh 5,000 was based on the following information. Now this depreciation is provided on the debit side of the profit and loss account as per the accounting method. But now what information, extra information is provided here? The opening balance of plant and machinery, that is written down value as on 31st March 2021 minus depreciation for previous year 2021 is 4 lakh 20,000. So it is what? It is opening WDV. A new plant falling under the same block of depreciation was bought on 1/7/2021 for rupees 70,000. Now two old plants were sold on 1/10/2021 for 50,000. So this is opening, this is purchase, and purchase is before 3rd October. So that means it is used for more than 180 days. So there is no question of half depreciation. Full depreciation is available in case of 70,000 also. And old plants were sold on 1/10/2021 50,000. So we have to actually find out what is the written down value as on 31st March 2022, and on that depreciation is available. So we will see that portion into the working note. Now next one, rent and rates include GST liability of rupees 3,400 paid on 7/4/2022. Here, if any tax liability is paid, is not paid during the previous year, that is what is previous year 2021 to 31st March 2022, but it is paid after the completion of previous year. So here section 43B is applicable. What is section 43B? Means if you have made certain six expenditure are given, and GST liability, this is a tax liability, which that liability is covered under that section. Now if you had made payment of 3,400 before the date of return of income, due date of return of income filing, then this expenditure is allowed. So what is the due date for individual? 31st July 2022. So now this expenditure is paid before 31st July 2022, before the filing of return of income. So now that is why this 3,400 is allowed. So you don't have to give any treatment for GST liability, but you, what you will do, you will write down one note only. Other general expenses include 2,000 paid as a donation to public charitable trust. Now this is not allowed because here this deduction is available to some other section. So in PGBP, this type of expenditure is not there because it is not related to the business. Now what you have to do, you are required to compute the profits and gains of Mr. Sivam as per the normal provision of the act. Assume that the whole amount of turnover received by account paycheck or use of electronic clearing system through the bank account during the previous year. So now answer, let us see the answer. We have studied the example thoroughly. Now on the basis of that, we will solve the example very quickly and very easy manner. Computation of business income of Mr. Sivam for the assessment year 2022-23. Now particulars, inner column, outer column, net profit as per profit and loss account 50,000. It is given, that is our starting point of question, and it is given in the question itself. Here you can see that 50,000 is given. Now what you have to do, you have to add inadmissible expenses and losses, and those things we will write down here, like undervaluation of closing stock. Actually, this is what admissible, inadmissible income. So that is why that is added. So now what is the undervaluation of closing stock? 18,000. So directly it is added because by that amount your profit will increase because it is undervaluation of closing stock. And I already explained you, you will write down closing stock on the credit side and it will increase your profit. So that is why it is added here. Salary paid to brother, unreasonable. I already explained you 2000 is unreasonable. Section 48 2 is applicable. So that is why it is added. Printing and stationery, the whole amount of printing and stationery paid in a cash would be disallowed since such amount exceed rupees 10,000. Section 40A 3 is applicable. So 23,200 will be added because it is inadmissible expense. Depreciation, we will deduct a separate depreciation as per the income tax. So whatever depreciation given in the profit and loss account, we will add that depreciation straight away here. Short term capital loss on share, it is not a admissible expense. So what we had done here, we have added it. Then donation to public charitable trust, it is also inadmissible expenditure, so we have added it. So if you add into this, you will get 2,08,300. So this is your net profit after adding inadmissible expense and losses. Now items to be deducted. So what amount do you have to deduct? So undervaluation of opening stock and income from UTI, because these two items are will decrease your profit. So 9,000 because it is undervaluation of opening stock, and undervaluation means that if you write down on the debit side of the trading account, then by that amount your profit is going to decrease. So that is why it is written here. And income from UTI chargeable under the head income from other sources 2,400. So 9,000 plus 2,400. So 11,400. So 2,08,300 minus 11,400. So your business income before depreciation is 1,96,900. Now less depreciation 66,000. So now how this depreciation comes, that we have to understand. Now calculation of depreciation, particulars amount rupees, opening balance of plant and machinery as on 1st April 2021, it is given in the example, that is WDV as on for 31st March 2021 minus depreciation for the previous year 2021. So 4,20,000 is the amount. From that, from in that you have to add cost of new plant and machinery, that is 70,000 you have to add here. So what is your total now? 4,90,000 after purchase, and this purchase is before October. That means it is going to use for more than 180 days. And if it is going to use for more than 180 days in which it is purchased, then full depreciation is allowed. Now let's sell proceed of the asset sold 50,000. So 4,90,000 minus 50,000. So what is the WDV of the block of plant and machinery as on 31st March 2022? 4,40,000. And depreciation is applicable at 15%. That means if you make depreciation on plant and machinery, that is 15% is applicable. But here no depreciation rate is given, because at what rate you have to charge depreciation, that is not given, provided information is not provided. So nor it is a general plant and machinery, so 15% is applicable to it. That you have to keep in mind. Written down value of block of plant and machinery 31st March 2022 4,40,000. So depreciation at 15%. If you charge 15% of 4,40,000, 4,40,000 into 15 percentage, you will get this amount 66,000. So now that is why they have deducted depreciation 66,000 here. So what is your net profit or your business income? So what is your business income after depreciation? 1,30,900. So this way you have to make the solution for the example, and you will get full marks in the exam if same type of question comes in the exam also. So thank you very much for watching my video till end. If you have any doubt, you can write down in a comment box. I will try to make a reply of the same. Have a nice day. Bye.